Howdy, y'all. My name is Anthony Green, and I'll be doing the voiceover for the cost volume profit analysis project we did. We as a group wanted to create a spreadsheet that would auto-populate a break-even and target profit analysis based on a handful of inputted variables. Our ideas for doing this project came from Zach Sun, who had spent the last couple of summers working in pest control and felt like it was a simple business plan to copy. He had questions on how many customers he would need to break even or make a profit. This spreadsheet was made for him, but could be used by other business owners as well. Some of the things we did to begin the process was to gather relative information, which we then inserted into our input variables. We also looked at reasonable goals that we could accomplish with the pest control company. We then experimented with the break-even and target profit results, leading us to our final spreadsheet. The way we gathered information was through Zach's son, Lincoln, and his contacts. All of them have worked in pest control companies for many years and understands the reasonable cost and revenue. Going forward, I would like to point out the yellow cells in Excel are input variables. The white ones are calculated on their own, and the green ones are the number of customers we need per quarter. One of the key costs for pest control companies is office labor. In this example, we assumed office labor would be 30 hours a week. When the average hours per week is inputted, it auto-populates the total hours per year for office labor, which was 1,560. With the wage rate cell, you can put the hourly wages for your employees, which will calculate the total cost based on the hours per year you selected. In this example, we used $20 an hour for our office manager and $10 for the receptionist. Based on our previous example, the hours per year was 1,560. This brings the total cost for office labor to 46,800. Another cost for pest control companies is depreciation. On this slide, we have input cells for the quantity, life of the asset, and cost of the asset. These inputs will then generate the total cost for each individual asset, as well as the total cost per year for all the assets. The next couple of slides are more expenses that we think a pest control company will have. This includes rent and utilities. Here we start getting into some variable costs, like how much hours does the job take, or how much commission does the technician make. This can all change from job to job or month to month. Here's where it starts to get fun. We're talking about making money and exactly how much to charge per job. Remember in the beginning I said our jobs are done quarterly, but the clients sign up for the year. The target profit is how much money the company wants to make at the end of the year. This is with both variable and fixed costs taken out. Here we assume 25,000 was a good amount. However, it could be changed to 10,000 or 100,000 based on the company's preference. Finally, we are going to start getting into some formulas. Here we are calculating unit contribution margin. Unit contribution margin is the amount of money you make per unit or per job, in our case, after all the variable cost has been taken out. Contribution margin ratio is calculated by taking the unit CM that we previously found and dividing it by the unit price. In our case, we used our $40 unit CM and divided it by our $100 unit price. For me, this is the most exciting formula. This is because it calculates the exact amount of revenue a company needs to make to reach their profit target. This amount was calculated by taking the target profit and adding it to the total fixed cost, then dividing it by a contribution margin ratio. The next formula we're going to talk about is quantity required for target profit. This formula calculates the amount of jobs that are required to make their target profit. To get the number of jobs we need to add the target profit to the fixed cost and then divide it by the unit contribution margin. The variable income statement will automatically compute based on your input variables. At the bottom of the slide, we can see the total number of customers we need per quarter and our net operating income. Doesn't that number look familiar? The next couple of slides cover degree of operation leverage, revenue for break-even, and quantity for break-even. These are all important formulas, but I wanted to save some time to do an example with our cost volume profit analysis sheet. Hey guys, it's Anthony here. We're going to work on the Excel examples. But first we should take a look at some of the layout. We got our target profit here, customers needed, and these are just random numbers. We're going to switch it all right now. And on our P&L, we have a couple of inputs that we're going to switch, kind of show you guys how everything works. Got the officer wages, the technical wages, commission, whatnot, and then our income statements on the left-hand side. And after this is all done, we'll show you that the target profit will be what we set it at. So let's get started. So for our first fact is our X, Y, and Z, the company name. Pest Control is expecting their employees to work 40 hours per week. So we're going to go on and head over to our input screen for that. And before it was 30, so let's see what happens to when it switches to 40. As you can see, our hours switched from whatever it was to now to 2,080 per year. So that's good. That means we're on the right track. They're going to pay their office manager $25 per hour and the receptionist $18 per hour. So again, we're going to switch back over to this other tab. And I believe it was 25 and 18. So, yep, that seems about right. Our labor base is now $8,944. $89,440. Sorry for that. That's an error on my part. They are going to have two trucks that cost $25,000 each with the asset life of 5 years. So we're going to go back and switch that because it is going to be a doozy for the assets. So I'm going to start up at that. There we go. Everything changed. Let's go back and see what other kind of assets we have. We have one application pump / tank that costs $2,200. So we can go back here. 1, 5. We just gotta switch the cost to $2,200. We have 3 computers that each cost $600 with a depreciation life of 5 years. So we're gonna switch to quality 3. And we need to switch the cost to $600. And our office furniture has 4 pieces of $400 each with 7 years. So 4, 7 is good, and 400. So we're now finished with the assets, and this is what the depreciation of the asset is per year. Okay, for the fourth fact, it says the space was rented is 600 feet, and it charges $12 per square foot per month. So we're going to go back over here, and this square feet rented is 600. And the price per square foot is 12. There we go. Our annual rent expense is now $86,400, and that jumped up. The annual utility cost is expected to be $3 per square foot. Let's hop back over. Wow, we must have moved to a good location. It jumped up that high. All right. Looking good, looking good. The amount of officer labor is 100% related to overhead cost. So seems like we don't have to change that because our payroll expenses are already at 100%, which is good. Means everything is included there. Our labor base is 89,440, and our payroll expenses is the same. So that means we've used 100% of that, which is good. No need to change it. The expected annual office supply expense is $450. Hop back over. And no, this is back here. Sorry for moving it so quickly. $450. Let's go back to the calculation sheet. Okay, so our insurance is going to be $600, and we're already here, so we might as well take the tax prep of $1,100 also. Not to hurry it up, but I want to flip back and forth. So we're going to switch this to $600 for the insurance. And I'll lower this to $1,100. I'm going to check my numbers because I did 2 at the same time. 600, 1,100. Let's go back. Alright, that's correct. It would be a mistake if I messed up while trying to show you guys how to use this great template we came up with. In regards to variable expenses per job, technicians get paid $16 an hour. there's a 25 commission rate, and the average service job is $20, and it takes 1 hour to complete. So there you go, $16, 25% at $20, and 1 hour stays the same. So you see our variable cost is not up to $61 per cost of job. Okay. The average price per job is $150, which is nice. It's nice. Okay, so we updated that. Let's go back and check. After careful consideration, X, Y, and Z's Pest Control has decided their target profit is $32,000. So we don't have to switch the page now. It's right here. So we're going to do that. But before I hit enter, let's take a look at our numbers so far. Our quarterly customers are supposed to be $793. Our unit CM is 76. Our quantity required to reach our target profit is 3,170. The revenue we're supposed to reach the target profit is $475,413. Let's see when I put in 32,000 for the target profit. Let's see what switches. Okay, so our quantity of jobs increased about 130. Our revenue increased about $10,000 or $11,000. Not too positive on that. And our customers increased about 30, I believe, around 30. So you see with our target profit, our quarterly customers increased also. Our CM stayed the same because it doesn't matter how many customers we serve, it will always be the same because it's taking away our 150 minus our variable cost, which we've already calculated on this next page. I'm going to scroll down. Our break-even customers, which means the amount of customers we have to serve per quarter, is 711. Our break-even revenue is 426,394. Okay, not bad, not bad. Let's take a look. I'm gonna zoom in a little bit. Let's take a look at our income statement. So we got our total revenue, our wages, our commission, material, contribution margin, which is good to know. Our rent expense is the same. Overhead expense is calculated correctly. Our net operating. So remember when I put in the target profit and we wanted it to be 32,000, where there's the number, and then after taxes we get to 25,000, which is not bad. And customers we need quarterly, and the number of jobs we need, which is not bad either. Okay, let's take a look. Before we zoom out, scroll back over. Trying to figure out a way what we should be changing. Okay, for example, you see our unit CM is still 76. So maybe after taking this into consideration, we try to switch some variable cost or fixed cost. See, what would that change? If we pay the technicians $13 instead of $16, a unit CM would go up. So let's change it back to 16. All right, stayed the same. Well, thank you for viewing the video. It's been a pleasure to try to show you guys around the Excel sheet. You guys have a great day, and good night.